Hi, everyone. I hope you had a great Monday. The stock market had an overall relatively decent Monday, I guess you could say. The NASDAQ hit new highs once again since 2000, up 0.09% on the day. Volume was well below the Friday session, but this is what happens in the month of August if we have above average volume. That would be a little bit abnormal if we have below average volume throughout this month. Not a surprise. This is when a lot of people on Wall Street go on vacation, so get ready for probably a little bit more of this kind of action. But whenever I always say that, we always end up getting like some big move up or down. But if we have low range days on lighter volume for the rest of this month, I won't be surprised. And actually, it'll probably be quite healthy for the market for a September October move. We shall see. But overall, pretty good day. Russell 2000 hitting new all-time highs. S&P 500, Dow Jones Industrial Average, and the New York Stock Exchange all pulled back on lighter volume, so all is well there. Also, on a dull day, it's always good to see moves like this that you see today in SAIL and LITB, two IPOs with some very strong earnings and sales growth. Very, very nice to see. And then look at WGO, CYD. This is why I say buy stops. Look at how big these stocks move once they break out. You don't get a chance to get long on breakouts, it seems like, anymore, very rarely. You have to have buy stops in, or buy buyable gap ups on the stocks that move on huge volume like BEAT, or else you're going to get left behind, because it seems like in today's market a lot of the move happens in one day. Netflix here, you can put a buy stop at new all-time highs. Once it hits new all-time highs, you're long. Priceline, another example of you needed to have a buy stop because you really can't chase up here with a pattern like this. It's susceptible to being a kind of a good decent sized pullback to the 50-day moving average, which would probably shake you out. But with the way a lot of these stocks are acting, and as you see today as I go through all these stocks that I am posting that I can remember having good moves today, then you know that you're in a decent market, or else you would have more stocks to show you on the downside. And whenever I think of the stocks on the downside today, I can really only think of Fossil as being the only high quality stock that I saw put in a pretty ugly move. On top of that, no sells, no partial sells, no complete sells. But sadly, I have some long signals. Why is that sad? Because I'm once again caught in between the earnings season dilemma, where you have the breakouts right before earnings. Earnings range on all these longs anywhere from, I think it's the 7th to the 9th at the most, but I believe almost all of these longs are the 7th and the 8th. So the new long position is SMI, and what is nice about this long position is that this stock has some recent huge earnings and sales growth that is supposed to continue into 2014. The huge volume along with the max green BOP is a huge long signal in an uptrending market for me. It's normally a lot better to see it in a stock that's a little higher priced, and also a little bit more active. The volume in this thing is, overall not huge, but still with the earnings and sales growth, it's worth a small position ahead of earnings. 2% in the risk account, 1% in the non-risk account for this one. And the low a day, 390 is the absolute final cut loss. 395 is going to be the first level for me on that one. And now for the ads, SCTY, very nice breakout, and is actually pretty much in a decent range of the previous pivot point in July. So this could work on an end-of-day basis. However, earnings are coming up. So another small position. I'm going to go 1% in the risk account, 1% in the non-risk account. You can also play straddles on this or buy calls. I haven't decided what I want to do yet. These are options available to you if you believe that there's a big gap opportunity in this stock. Obviously, if I go long, I'm hoping that the gap is up, just like I am with GMCR with its pocket pivot point buy signal today off the 10 and 50-day moving average. Excellent move to new highs from a very solid, well-constructed base. The only thing problematic about it is that relative strength money stream aren't hitting new highs ahead of the price, and earnings are coming up also. So once again, 1% and 1%, tiny positions. And then also MEET, a little shaky shake by not moving up immediately. And so, I took off 25% this morning, and of course was proven wrong immediately on taking some of it off, but that's okay with me because I'd rather have some of it off and then be wrong instead of hoping and then seeing the stock, let's say, gap down below the June lows, which could happen because earnings are on the 8th with this stock. But still, despite that, I still want to take an extra 1% in the risk account, 0% in the non-risk account, as the fundamentals don't basically are not strong and valid enough for a position in the non-risk account. In the risk account, though, I can go ahead and go with it with the chart pattern having a base being constructed full of accumulation and full of max green bop, a rare chart to see nowadays that they used to be able to be very reliable. When you saw something like this, they were very reliable, but they're not reliable anymore, so that hence the 1 and 0%. And that is it. Technically, if you're a new investor with all of these positions today coming ahead of earnings, technically, I wouldn't take any of these trades. However, I want to get a little bit of risk on in case we are in a runaway bull market where I will not get the pullback that I want to the 50-day or, God forbid, the 200-day moving average before hopefully we go on a parabolic run, whatever. So these are, I'm willing to go ahead and take the risk. But in a market that is so far extended from its 200-day moving average, you have to realize that any new long position up here is extremely risky. So invest accordingly.